Hello everyone. Today let's discuss about ETFs. So I have bought a special ETF today which is of Nifty 200 Momentum 30 Index ETF. I thought let's have a discussion on this ETF. The reason being the CAGR which we are seeing, the returns which we are seeing for this index or this ETF is terrific when we compare it with Nifty 50 or Nifty 200. So it's at 21.7, whereas Nifty 50 is at 15.1, and 1 lakh invested in 2005 would have been 43.7 lakhs, whereas for Nifty 50 it would have been 14.8, and for Nifty 200 it would have been 15.2. This chart clearly shows the outperformance of this index compared to Nifty 50 and Nifty 200. So let's get deep into this as to how this ETF is derived and how the stocks are selected based on the momentum factor. So basically the universe over here they are considered is of the Nifty 200 index. Of that also they are considering stocks that are eligible for derivatives, and from that they are selecting 30 stocks. Now 30 stocks are selected based on the momentum score that is being generated, and the rebalancing is done semi-annually, so twice a year this balancing is done. Now this is same like similar thing, but the important thing over here is how the momentum ratio is calculated. So momentum ratio is nothing but price return divided by the standard deviation, and then the Z score is there. We need not go into details of this. The other aspects can make it easier to understand. So over here what we are saying is in momentum 30 index, uh, there is almost, if we see the top 5 stocks, almost similar kind of investment is done in all the top 5, so around 555%. But whereas if we look at the Nifty 200, then HDFC is weighing around 8%, and Nifty 50 HDFC is weighing around 12%. So this shows that even if these big indexes are there, then also there is huge weightage on the big companies, and the momentum factor is not considered over here. Whereas for these momentum 30 index, the scores which are based on the momentum factor, those allow different stocks to get into this index, and we are diversifying based on the momentum, not just on the market cap. So now here we can see why this indicator performs good. So if you see there is fairly overweightage of at present, if you see, of capital goods, automobile and auto components, and if we see for Nifty 50 it is only 8%, but whereas since momentum is there for the auto stocks, this indicator has 24% of the weightage. Similarly for capital goods, Nifty 50 has 0%, Nifty 200 has 5%, but here in momentum indicator it has 24% of weightage. So this helps it to outperform compared to the index Nifty 50 or Nifty 200. Now, if we see, there is one thing that we saw earlier, that was the rebalancing that is done semi-annually. So, if you see, uh, for example, auto stocks, auto component stocks that were the sectorial exposure that was there in early 2020, it was very less, but slowly it has increased and now it has gone up to 25%. Similarly for capital goods was not there till 2021, but then since there was momentum in the stocks, this index picked it up, and then the index has grown, the exposure to this sector has grown. So this is how it helps to outperform compared to the other indices. Now here one good thing about this momentum in this momentum ETF is we can see that there is a fairly good exposure to the big or large cap companies. So here we can say 71% in 2016, and at present it is of 85%. So this may vary, but it is always, if you see, most of the time it is above 70%. Sometimes it has gone near 60, but most of the time it is above 70 or 75%, and like it has gone up to 88, 85% also. So then this helps that we are not investing only in small cap, but momentum is helping us to invest in good companies also. Now, if we look at the rolling returns for 3 years, 88% of the times it has delivered better returns over Nifty 200 with average outperformance of 6.8%. So this is a good thing that we can see. If you see over here in 2014 till 2020, then also afterwards, this outperformance has been huge. Similarly, if we have 5 years of rolling returns, then 99% of the time it has given better returns compared to Nifty 200 and outperformed by 6.1%. So, if we are investing for long term, then we can be sure that there will be good returns compared to the index. But the other major thing is about the drawdowns and the risk. So here we can see the drawdowns are also very big. So like in 2008, this was a meltdown. So yeah, this is an odd event. But here also, Nifty 50 or Nifty 200 was around 60 or 50%. Maybe if we can say around 60% drawdown was there. But then drawdown of this index was around 70%. Similarly, if we look into 2022, the drawdown was at around 30% for this fund, but the index had fell till 15%. So the risk over here is the drawdowns are very huge compared to the indices fall. So we have to keep in mind these kind of falls can be there, but if we are having a long term perspective, then that won't affect you. So one thing that as a strategy we can do is whenever Nifty is down by from the top, if Nifty is down by 5 or above 7%, then at that same time, if we look at this ETF, it might be uh, like it will fall below or it will fall higher compared to the indices. So then that can be an opportunity for our long term perspective. We can start investing at that time, and then for a few months we can invest and then stop and then keep that fund aside. Something like that can be done. Now, if we look at ETFs, these are exchange traded funds. So basically, we can sell and buy these ETFs on the stock exchange itself. So, for example, if you are selecting ABSL Nifty 200 movement of 30 ETF, the NAV at present is of 35.16 and the AUM is of around 70. So you can select any of these. Most of them are having similar exchange expense ratio. The bigger fund over here is ICICI Prudential one. So this ETF will give you an balanced, what you can say, diversified and balanced investment strategy. But we have to be cognizant of this fact that the drawdowns can be huge, and we have to keep a very long term perspective if we are investing in these kind of funds, in these kind of ETFs. So okay, I thought let's have a discussion on this. So do your own due diligence before investing. Take help of your investment advisor. Also do like, share and subscribe to my channel. Thank you.